Welcome to the Tech Blog Writer Podcast, your guide to future tech trends and innovation in a language you understand. Now, over to your host, Neil Hughes.
Welcome back to the Tech Blog Writer Podcast. How are you all? You have a good weekend? I've heard I had quite a stressful one with a few of life's curveballs thrown in my general direction. But hey, life isn't all sunshine and rainbows, right? And I'm still here smiling, so mustn't grumble, as they say over here in the UK. Now, before we get started, I have a few questions to ask you all. What have been your favourite episodes on this podcast? And who have been your favourite guests? Now, the reason I ask that is because as we approach 500 podcast interviews, I want to put all the lessons that I've learned from those best guests into one big book. But to make that a reality, it's going to involve a whole heap of work. I don't think I realise just how much I'm signing myself up to here. And of course, that means I need a little bit of help from everybody listening. So please, let me know your thoughts by emailing me, techblogwriter@outlook.com, tweet me at Neil C. Hughes, or even recording me a voicemail over at my site, techblogwriter.co.uk/podcasts. Now, of course, one of the reasons I want to try and get all of those lessons into one book is because I love learning lessons from guests. And I think today's guest is another great example of that, because he's gone from launching a company in Tel Aviv in 2016 called Pagaya, which has also gone on to land $75 million in debt financing from Citigroup to help create a fund to invest in loans originated by peer-to-peer lenders. And they've also recently landed a 20-year BlackRock veteran as a chief investment officer, so it's fair to say that they're making some pretty big waves in the fintech space. So I invited their CEO on the show today to tell us about that journey, and he's currently waiting to speak with us, so buckle up, hold on tight, so I can beam your ears all the way to New York, so we can speak with Gal Krubiner, CEO of Pagaya. So a massive warm welcome to the show, Gal. Can you tell the listeners a little about who you are and what you do?
Thanks, Neil. It's a pleasure to be here, and hi, everyone. So my name is Gal Krubiner, co-founder and CEO of Pagaya Investments. We are a fintech company trying to disrupt and reshape the way investment are being done with massive technologies such as artificial intelligence, big data, and kind of technologies that never has been penetrated yet to places of asset management, and specifically in places of fixed income, credit, and the more, let's call it, traditional markets.
Now, Pagaya is known as a fintech company using machine learning and data analytics to reshape that asset management space that we've just talked about. But can you expand on that a little, just for anyone listening that's new to what you're doing there, so they could help understand what problems you're solving and also what makes Pagaya unique from all those other solutions out there that are also trying to disrupt that space?
So I think the really fundamental approach and understanding is that in the last, I would say, 10, 20 years, the ecosystem got changed a lot. So places where we can access very unique data sets and the ability to get a lot of information on different assets is becoming very, very different than what we used to have 20 or 30 or 40 years ago, when asset management kind of took the less shape in modern history. And when you're talking about the ability to conclude and to have really important insights and understanding on the valuation of assets and the ability to manage portfolios, if it's in consumer credit or other fixed income assets, you will figure that deploying artificial intelligence, big algorithms that take into consideration tons amount of data, is really making a difference. And a lot of the discussion about active management kind of having a bit of a problem creating value for investors is really because we believe that a lot of algorithms and places where technology can make a difference hasn't been deployed yet to asset management, to portfolio management and stuff like that. And the solution that we came with, which is eventually looking on specific loan, on specific assets, and trying to define it with enormous amount of data. And just for example, in consumer credit, so you can think that on a credit bureau type of file, you have 1,500 parameters. But back in the days, banks and big asset managers will look only on 5 major type of parameters, which is DTI, FICO, or income. And when we are taking that type of information into our models, we are getting squeezed all of that data of these 1,500 parameters in order to be able then to understand what is really the risk behind each individual borrower or loan. So in a nutshell, I think it's really taking advantage of the data revolution that happened in the world in order to manage assets in a more meaningful and thoughtful way, which at the end, there is a big advantage for algorithms and technology-wise, rather than analysts which are sitting and trying to analyze companies or very specific parameters such as FICO and stuff.
Now, you guys also launched in the US with 75 million in debt financing, and I also believe that you'll use that financing to create a new leverage fund suite called the Opportunity Fund. Can you tell me more about that Opportunity Fund?
Sure. So I think that generally speaking, consumer credit in the US is very interesting asset class. As such, delivering very interesting returns. And when we created the new leverage fund, the idea was, first of all, to partner with a very big institutional such as Citi that provided us the debt financing, and as next stage to kind of tap into the more securitization and more traditional capital markets places, trying to create additional added value for our institutional investors. So the launch of that fund kind of created the first footprint of Pagaya in the US as a dominated and leader asset manager in that space, which the initial idea and how we're going to play it is really go after capital markets and creating additional value for our clients, obviously everything using our technology and ability to manage assets on the very best level.
And what also put you guys on my radar was I think you recently landed a 20-year BlackRock veteran as your chief investment officer. I mean, that's incredibly exciting, isn't it? Can you tell me more about that?
Yeah, so the story here is really interesting because we kind of we met Ed, which is a guy that was, I think, the 100th employee in BlackRock, and he literally saw how BlackRock became from a small shop like us to a multi-billion-dollar asset manager, the biggest in the world as of today. And when we met Ed, it was obvious to him back then, only now I know that he sees the reflection point of what was so interesting in BlackRock to become what it is today in Pagaya, in the sense that back in the days, BlackRock created a lot of technology on securitizations and on different asset classes, and the same discussion is kind of happening in Pagaya today on a different level of technology. So the fit was very natural for us that he's coming with this massive amount of knowledge about different asset classes, about what is a sale to institutional investors in the US, and how you deploy that technology into these places. And we came with a lot of knowledge about these tools and machines and algorithms. And I think that the play of the connection, and I think this is really the story about Pagaya, that we are kind of a very unique player in the fintech space because we are one of the only companies that is really using technology, which is the tech in the fintech, but in the same time selling a financial product, right? So selling at the end to institutional clients a limited partnership kind of participation or investments is something which you don't see that often in the fintech space, which is mostly the tech. And bringing Ed was exactly the same direction of strengthening the fin and understanding that fintech at the end will exist with a combination of both. So I think Ed saw the value, I think we saw the value, and for us it was very obvious that getting a help and onboarding someone who saw how an asset manager is being born will make tons of sense for our business.
Now, you mentioned the story of Pagaya there, and I believe it was founded in Tel Aviv back in 2016. So can I take you back in time to tell me about that story behind the company, what the catalyst was that turned that idea into the business or the successful business that it is today?
So I think the very, very initial thinking was like, again, I'm coming from a strong domain expertise from UBS, wealth management, investment banking, CLO, alternative places, together with my partner, Yulzari, which is coming from management of real estate funds. And on the other side, we had Avital, which is the third co-founder, and he's maybe one of the top technology guys in Israel from a very specific unit in the army. And when we came together, we kind of had the understanding that there is a lack of understanding of how you manage assets in a data-driven world. And for Avital, it was very obvious that you can kind of create additional value, what is being called as alpha. And we had really the understanding that people are lack of the understanding of these asset classes, and the need and the business need was very, very obvious to us. And I think that Israel is playing an interesting play here because a very natural fit between the fin and the tech, as I discussed before, is something which is not that often happening in the US or in other places, and was very kind of natural in Israel, because if I would kind of created Pagaya, so I would be more like my three co-founders would probably be some financial guys, and if Avital would create Pagaya, that would be three very techie guys. And the ability to create some kind which is an animal which is in between, which is using technology but actually doing finance, that's the unique story here. And I think that's one of the things that can happen in Israel, where you have a hub of finance and you have a hub of technology, and it's a bit less kind of, I would say, different than in the US. You have East Coast and West Coast, so everything in Israel is kind of one hub in Tel Aviv, in the same places. So I think that's really the story beyond Pagaya, and we saw that tremendous amount of opportunity there. And first thing, we went to institutional clients, and they loved it, and they really understood the value proposition and the need for a technology-oriented asset manager. And that's how the business idea came into place and our first steps into the market.
I think it's also worth mentioning that there's a huge thriving tech startup scene in Tel Aviv, isn't there?
Yes, it's like, I think that very interesting to see the waves of startups in Tel Aviv. So back in the days, it started from very internet-oriented type of startups, and then it went and became more, I would say, heavy technology-wise. And I think Israel now is really known for the independent driving. So Mobileye, which is a very big company that help kind of cars getting drive without drivers, and everything is artificial intelligence and very sophisticated technology. And I think that we saw another wave in fintech. You have Funbox, you have Behalf, you have a lot of places where like even Lemonade are the owners are from Israel. So the combination of financial and technologies, or I would say market expertise and technology, is something that really has a fruitful ground in Israel to be developed. And for us, it's exciting. And as of today, when we are managing money for the biggest banks in Israel, insurance companies, pension funds, so to think that these ecosystems allow all of that to happen is something we are really proud of.
Quite right too. I mean, you've been on an amazing journey. But what are the biggest challenges or obstacles that you've had to overcome in launching and running a tech company of your size?
I think the challenges, as always, is try to educate the market, right? So when you first come with the idea and trying to explain why it's so different. So for you as an entrepreneur, it's super obvious. But the hard part is transforming that message into something that your audience will be able to kind of get. Because you can't sit with investment committees, which are our clients, and kind of dig into what are differences between algorithms and why A is better than B. So you need to create a very streamlined understanding and kind of break down all the value chain into something which is at the end still speaking in a traditional language, but coming with the very cutting edge technology capabilities and advantage. So I think the transformation of the uniqueness of Pagaya from a technology standpoint to a selling standpoint of view was something that took us some time and was one of the tasks which were not supernatural to us in engaging these discussions.
So what are the top 3 things that you're working on inside Pagaya right now here in 2018 and beyond?
So I think I would say that first of all would be gaining more momentum with institutional clients around the world, trying to keep continuous this grow and US market penetration that we already started. So as you mentioned, Citi was the first kind of initiative in that discussion, and the first one was Ed, the ex-veteran BlackRock guy, and I hope that later this year we're going to announce on very interesting deals with institutional clients in the US and maybe some other angles we're exploring. Second thing, I would say that broadening our offering. So there is a tremendous amount of opportunity in other markets deploying high level of technologies such as subprime autos, real estate, and understanding that data-driven markets are becoming larger and more accessible for different players, and therefore we need to be a leading player and to lead the change and the disruption there. That's something which is very important for us and be kind of our mission, I would say. So I would say to expand to other asset classes. And the third part will be to enlarging our US presence and office, and to have enlarging our team, which we are going to hire some more interesting hiring in the next couple of weeks to months.
It certainly seems you've got an incredibly busy but equally exciting year ahead. But do you think we'll see more and more investment bodies turning to AI advanced technology over the next few years? And if you think that will happen, how do you see this changing the financial landscape as a whole?
I would say there are 2 different elements to that.
Yeah.
So I think the S&P announcement a few days ago of buying this massive AI company, Kensho, for something like $500 million is definitely things we're going to see more often. And I think there is a big discussion of how big organizations such as big banks, big asset managers, etc., are kind of being connected to the changes in technology and trying to deploy these things in-house. I would rather say it's not easy, because a DNA of a company is really important to the way technology is being used. And I would rather say that in the next few years, I would believe that we will see more type of financial services which are deploying technology and starting as startups. So if you want to think about it, that fintech started very much from disrupting payment, going to disrupting lending, which is very banking type of industries. And then we had just recently the second wave, which is the insurance type of disruption with Lemonade and some others. And I think that we are going into a third place, which will be more asking the question of asset management. And we see a lot of interest from VC talking about how artificial intelligence and different technologies can influence that. And I would say that I think in the near future, we'll have a broadening of implementation of these type of technologies into different type of places in finance, and this is very much driven by domain expertise. So our ability to take these type of technologies and deploy them into asset management is because we are coming from that type of understanding of the market. And I think we're going to see more startups that are trying to take other parts of the fintech rather than just banking and insurance, and broadening the solutions that they are offering based on technology.
So was shaking up the investing world with your solution always a big part of your mission and moving forward and leading that charge of change?
So I think at the end, there is a big question of how big investment managers are taking decisions to invest where and what.
Yeah.
And the reshaping or the shaking up is really trying to offer different methods which are very much quant-based, which are very much mathematical approached, rather than quarterly results or yearly snapshots of companies, and trying to say, guys, in today's world, there are different ways to kind of make investment decision. So our mission is to transform the way people think about the ability to take investment decisions and deploying more and more tools which will allow people to take investment decisions. And I would say that would change tremendously the asset management business. So maybe if today the core is in New York with thousands or hundreds of thousands of people are working in that industries from that offices, maybe in 5 years' time we're going to see half of that which people are working in the West Coast and in the Valley, or maybe in Israel, in places where technology is what's driving the ecosystem. So I think it's going to be a shift here of resources, of DNA of company, of technology, and of employment even, to different places where back in the days in asset management was very different.
So what's next for Pagaya? Is there anything else that you can share with us today about your plans?
So I think in terms of Pagaya, we have the beauty about finance, it's huge.
Yeah.
So there are many places to dig into. There are many asset classes to explore. There are many tools to develop. And there is a lot of places to make disruption. So I can't share specifically about the next milestones and stuff, but I would guess you're going to hear a lot from us in the next few months on trying to get more partnerships with more strategic guys, as we did already with Citi, Prospers, and some others.
I love the fact you've left us with a teaser there, so we're going to have to speak with you again in 6 months to find out more. But before I do let you go, could I just ask that you remind the listeners of your website URL, social channels, and how anybody listening can reach you guys with any questions?
Sure. So our URL and website is the same three, www and start, and Pagaya, Pagaya, mid-inv.com. You can find there about the team, about the offering, about us, and I think very high level since it's asset management, but will give you definitely a taste. In terms of social channels, I guess LinkedIn is the most active part for us, as we are not consumer facing and we are more B2B type of thing. And we are kind of reachable. So if anyone has any kind of thinking or interested in any type of discussions around new asset classes, we hear a lot of crypto discussion lately, asset management in crypto, which could be something maybe to explore in the future. So feel free to reach us through the website, contact us, and I think even our emails are there, so rather approachable to these type of discussions.
Excellent. Well, a huge thank you for coming on today. I love how you guys are using the data revolution to disrupt the traditional world of investing and asset management, but in a meaningful and thoughtful way with technology. So thanks for coming on, and I wish you the best of luck transforming the way people think about investment decisions. So thank you.
Thanks a lot, Neil.
There really does seem to be a whole wave of disruption across the entire financial landscape at the moment. And I think Gal is so right in what he says there, and I think we can expect more and more startups to hone in and disrupt those niche areas of the industry. Financial technology has come a long way in improving the experience of individual investors, but there has been little progress made at the institutional level. So for those reasons alone, I wish Pagaya all the best of luck in the future in working with the largest lending marketplaces to retool that backend and ultimately deliver better returns for institutions. But for all you listening out there, do you work in the finance industry? And if you do, or you just like observing and following that industry, what trends are you noticing? This show is all about getting your voice heard, your opinions and your expertise out there too. So please, email me at techblogwriter@outlook.com or tweet me at Neil C. Hughes. Let me know your thoughts and I'll be on standby waiting for your opinions. But I'm afraid we're out of luck and out of time, so it's time for me to sign off. So all that's left for me to say is big thank you for listening, and until next time, don't be a stranger.
Thanks for listening to the Tech Blog Writer Podcast. Until next time, remember, technology is best when it brings people together.